Thanks for tuning in to today's podcast. Please remember that all of the information in this podcast episode is limited to general information only. That means the information is not specific to you, your needs, goals, or objectives, so you should seek the advice of a licensed and trusted financial professional before acting on the information. And before you acquire or apply for a financial product, please read the PDS or product disclosure statement, which should be available on the issuer's website. Lastly, please keep in mind that past performance is not indicative of future performance. In this quick episode of the Australian Investors Podcast, I'm joined by Kanish Chugh of ETF Securities as we dive into the ESTX ETF. This is an ETF that's focused on the European stock market. So if you're interested in this exposure, we talk about what the fund does, the opportunity in Europe, as well as some of the exciting companies hidden within this ETF. I hope you enjoyed this episode of the Australian Investors Podcast. Kanish, wonderful to have you on the program as always, mate.
Owen, thank you for having me back.
We're going to talk about another ETF today. We've got the ETF Securities ESTX 50 ETF. It's on the ASX under the ticker code ESTX. So this is one that's been really interesting recently because a lot of our followers have actually written in to say, how do I get exposure to Europe? For one reason or another, whether it's the recovery out of COVID or whether it's just for really interesting companies, a lot of our investors want exposure to Europe. And my answer has always been, well, check out the ESTX ETF. So here we are. We're going to talk about it. We're going to go through some of the companies that are inside it, how it's put together and what you can use it for. But first of all, maybe I'll ask the question to you. Why do people and why do investors want this ETF? Like, what is it that they're coming to you and saying, this is good exposure for?
So I think the best way to answer that question is what is the index that the ETF is tracking? So the ESTX ETF tracks the EuroStoxx 50 index. Now, what is that index? That essentially is the 50 largest blue chip companies out of the Eurozone. So there's no UK exposure. It is purely the Eurozone countries. So countries like France, Germany, Italy, Spain, Netherlands, etc. Now, investors want exposure to Europe. And I think they're growing. It's sort of growing. I think what people over the past few years, I think Europe's been a bit of the forgotten child in the investment world. It makes up close to, I think, 20% of global markets. It is a large portion of the world economy, but people often forget that they should have some exposure to Europe. And there's some really well-known names within the EuroStoxx 50. And I think to also break it down in terms of the index itself, that is the equivalent of the ASX 200. It is the index that people look at when they're looking at, well, how has Europe performed? They look at the EuroStoxx 50. So for us, what we're seeing is as people's attention start to move again towards Europe, they're starting to say, well, how do I get exposure? Do I want the UK? Do I not want the UK? Is Brexit, is whatever else, issues I have, how do I consider investing in this region? And the EuroStoxx 50 gives them a really easy, low-cost way to access Europe, specifically in one single trade. They get the 50 largest companies, and especially in the current time, I think Europe's really performed very well. When you look at it against some of the US market, and also in terms of some of the underlying names, while they're based in Europe, they are global companies in themselves.
Why does the ETF not include the UK? Is there a specific reason?
Yeah, so we purposely had this approach because we wanted to give investors the ability to invest specifically into Europe. Europe operates somewhat differently in terms of the UK market as well. So in terms of the makeup of the UK markets from a sector base, etc., it is slightly different to how people would view Europe and the European market. In the European market, in terms of sectors, consumer discretionary, IT, industrials are some of the largest makeups within the EuroStoxx 50 index. What you find is, within the UK, they're heavy on, resources in particular. So for us, we wanted to separate that out. It was also a point of difference to other existing funds that were in the market, which all offer broad Europe and UK. And so the investment thesis to invest in the UK or the investment thesis to invest in Europe are two different theses. So we wanted to give optionality to investors, say, well, if you want to invest just in the Europe region, how do you do that? And you couldn't do that previously. So that was a big reason behind this. And also from the standpoint of when investors are building core building blocks within portfolios and looking at how to build the foundations of a portfolio, well, the Euro Stoxx 50 is, as we call it, the ASX 200. So if you're looking for a low cost passive solution, well, that's what that exactly what it's designed to do. It's not looking to target specific sectors. It's not looking to target specific outcomes, whether that's yield or volatility. It is really just looking at a very broad view on what the European market is.
It's an interesting one because I think often Europe, at least in the past decade, right, has been a bit forgotten by investors relative to the US. Because in the US, when we think global stocks, especially younger investors, they tend to think, Facebook, Netflix, Amazon, Google, and Microsoft. They're just thinking totally US companies. And they are geographically, their revenue is geographically diverse. But in terms of having exposure to some of the companies that have been around for 100 plus years, you want to look to Europe for that exposure. And so I'm just looking at a name here, which is like L'Oreal, right? L'Oreal, fantastic company, global company. But there are heaps of others on this list. Can you maybe, what are some names that people could expect to get exposure to? Like if they invested, we're recording this in September 2021, what kind of companies would they maybe get exposure to if they invested in this?
Yeah, so I just wanted to answer that one point though, in terms of investors forgetting Europe. I don't know. I think some investors probably have forgotten about Europe, but I think a lot of investors also chose to ignore Europe because of the debt crisis that they were going through post the GFC. That dragged on, the whole sort of saying of the ECB was sort of kicking the can down the road, and they kicked that can down the road for a long time. And you also had Brexit. So for a lot of reasons, Europe just trudged along in terms of the market. It didn't do that badly, but it just trudged along in terms of equity returns. And so a lot of investors were saying, well, why am I going to look at Europe, which essentially could be seen as a value play for a lot of investors in how they perceive the underlying stocks, versus looking at companies like Facebook and Apple and Amazon and Tesla, real growth names that were doing exceptionally well and have done exceptionally well over the past decade. So I think people are now looking back at Europe because I think from an earnings perspective, that's a key driver of investor interest and corporate profits. They're forecast to grow faster in Europe this year than the US. So I think there was some estimates suggesting that they may rise about 45% in Europe compared with 34% in the US. And a lot of that earnings growth is anticipated in that services sector, the consumer discretionary sector, which again makes up a big part of the Euro Stoxx 50 index. And you also have this idea of that, rotation to value, which whether people still believe it is the case at the moment, but there could be this case that especially if interest rates are rising around the world, there is that sort of rotation to value that may occur. And a lot of the European companies are considered a good value play from that perspective. But to your question then, I guess, in terms of the holdings that you get exposure to. So some really, as you mentioned, some names that have been around for decades. So if we look at the consumer companies, you mentioned L'Oreal, but another big one is Louis Vuitton Moet Hennessy, or LVMH. Now, this is a company that is situated and domiciled in Europe, in France, but it is a global company. Most of us will have known of one brand that LVMH sells, whether it's a consumer luxury brand or whether it's even you drink champagne and you drink, Moet. That is in itself part of their umbrella. And they actually did a deal with the Chinese company JD.com. So it gives them access to about 450 million active users of JD.com's website. So all of a sudden, they're looking at this in terms of you're buying an ETF that gives exposure to LVMH, a European company, but it's global revenues. And I think when you think about LVMH, it's really interesting because, as I mentioned, it makes champagne, handbags, perfume, clothes, but it's even gotten to a point where it finalized the purchase of Tiffany and Co. It struck a partnership with Jay-Z, the American rapper. It's bought 50% of his champagne brand. I'm probably pronouncing this wrong, but I think it's Armand Brignac, for about 300 million US. So you're seeing this big push in luxury goods. And it's actually also not just coming from emerging markets such as China, India, etc., but it's also coming from a growing middle class that are opening up their sort of wallets to luxury items. Whether that's right or wrong, they're using sort of buy now, pay later apps and things like that. But, I think we see it around the streets that there's much more, penetration in terms of Louis Vuitton's products in and around our society. So that's an interesting one in itself. Another company that I sort of thought would be interesting, given, yes, we're working from home, we're doing this remotely, and we're hoping that, in a few months we might be able to travel again, but is Airbus. So Airbus is, the competitor to Boeing, very hard hit by COVID-19. And, this company really, it's going to benefit from that reopening trade. And around the world in US and in Europe, that reopening trade has already started. So as investors want to look for sort of unloved value stocks that were hardest hit by COVID, well, Boeing's going to be one of them. This, again, is a company that it's ahead of the curve in exploring sort of zero emission planes as well. And it's looking increasingly at research into hydrogen power. So it's not sitting on its laurels. Yes, it's been hard hit by COVID, but it's a company that will probably still come back and fight strong. And so Airbus is another good example in terms of that value play that you might find within Europe that you wouldn't necessarily find, if you look domestically. And then another final one I just wanted to touch on is a company called ASML. So, I know this company well because we really recently launched a semiconductor ETF, and ASML is one of the top holdings in that. And so this is an IT company. It's a Dutch business, and it's often described as a company, one of the most important companies in the world that no one's ever heard of, because ASML are integral in all their machines, really, and their lithography machines are integral in the production of semiconductors, which are really driving all electronics and future of automobiles, etc. So that company is the largest holding in the Euro Stoxx 50 index. It's had considerable growth over the past 6 to 12 months because of that semiconductor shortage. And ASML hold a monopoly on that lithography system. So it is their IP. No one else has this machine. No one else can produce this machine. Last year, when Donald Trump came out as president of the US and said that they're going to ban the sale of these lithography machines to China, the New York Times did some work and said for the Chinese sort of local companies to get up to speed onto the same level of the lithography machine that ASML have, it would take them about 10 years and a lot of capital investment. And by then, it would probably be outdated. So you can see there that already a company like that. So Europe's really interesting. It's got some very good value plays. It's also got a few little growth companies in there, not little, but some growth companies in there that people may not be aware of. And as a result, we've seen considerable returns in the actual performance on the ETF. I think over 5 years, its annualized return is about over 11%. Over 1 year to the end of August, it's about 28.3%. So again, really strong returns.
Yeah, I think this is the business I heard about recently, ASML, on a podcast. I was just reading about it, and the technology that they have is absolutely fascinating. What they can do to chips, and to get basically all of the chip companies down to that 3 nanometer chip size, which is incredible. So to think that this company in a globally critical vertical has a monopoly in that one important space is incredible. So that's inside the ETF too. Another thing that's really interesting, you mentioned the return, the tilt to value, or like the return of value as a factor. I would call out that the sector allocations of the ESTX ETF is actually a lot more balanced than what you have here in Australia. So yes, there's still exposure to financials, but in Australia, our market is very heavily tilted to financials, whereas over in Europe and inside the ETF, it's pretty much a dead rubber between IT, consumer discretionary, industrial, slightly smaller, but you get a really good mix of companies. So it's a really interesting one in that respect too. And I think, there was a time there where some active managers were saying, India over the US in terms of the weights. If you see that growth come back, and there's companies like ASML, L'Oreal, even companies like Siemens and SAP, which I know are inside the ETF, these are great companies that investors should have exposure to. But one question that just a quick question then, is like, if you're thinking of putting this ETF in a portfolio, how are you seeing people do that? Are they putting it in that tactical or satellite exposure, or are they opting for it, to kind of have it in that bottom drawer core exposure and have it as maybe say a slightly smaller position, but for a longer term?
So I think where we see it being used, especially from investment professionals that we speak to, is in that it's either as a core allocation, but for much more, it's a smaller allocation. So it's not as big as the US. So if you were to think about your portfolio now, I think every portfolio in Australia has an overweight to Australia because there's always that home bias. But if you broke it down in terms of the size of the markets and replicating your portfolio based on that, Australia makes up 2.5% of the world. The US is about 50%. Europe as a region is about 20%. Now, if you were to take that into account, well, then it could be as high as 20% of your allocation within your portfolio. Right. We sometimes don't necessarily see it as high, but we can see it as a core building block. And then the alternative is we do sometimes see it being used as a satellite as well. As a tactical, as I said, I think that may have been the case 5 years ago when people were a bit out of love with Europe and were trying to time the market in terms of what was happening with Brexit. When is the right time to sort of play it? Right now, I feel people are starting to come back to the fundamentals of investing and how to look at Europe. And it really, a lot of that geopolitical sort of, I guess, further and sort of, the events around that, I don't think they're as impactful on the economy at the moment, and won't and will be. So I think people need to sort of come back to basics with Europe, and it can definitely be a core and a satellite. And because the other thing is playing the tactical game, it can be a bit of a hard thing to do, especially from this perspective, and the payoff may not be as great as you would want it to be, because you're investing in a broad, diversified 50 stock portfolio. So tactically, it's maybe not the way essentially to play. I do personally believe it's a potential core allocation or a satellite.
Yeah, makes sense. And I mean, if you're going to play maybe too tactical, you would maybe go there's another route with something a bit more specific or individual positions or something like that.
Exactly.
So how about then, just before we come to them, we kind of should balance that out a bit, just in terms of risks that investors should be aware of. It's pretty low cost, 0.35, isn't it? Yeah, in terms of the management fee. It's in terms of, I'm just eyeballing the chart here, so I don't have like any of the standard metrics in front of me, but it looks like in terms of volatility, it's been reasonable. So in terms of risks, what kind of risks have you identified, or what should people be aware of? Because I guess Brexit is probably behind us now. So
yeah, look, I think Brexit is behind us. I think also people may say, from a value perspective, people may say, well, at a PE level, it's currently, to the end of July, the actual index was trading at a PE ratio of about 25.8. So not not very, very cheap, not very expensive, but sort of where it sits. But if you took out a company like ASML, which has about a 9% holding within the index, and the considerable growth that ASML has had, well, that PE ratio may come down a little bit. So again, fundamentally on the broad basket of the stocks, definitely still considered more of a value play in terms of broad markets than, say, the US, which always is seen as sort of at the moment as a very much a growth story there. For investors, I guess, to consider is the allocations that they may have. So this is important, I think, when you're using ETFs, is what overlap do you get? So if you were to have a global ETF, or whether it be a global active manager, could there be an overlap? And so taking that into consideration. So if you just invested in the US, then you're not going to have any overlap by just investing in the Euro Stocks 50 ETF and then investing in an India or an emerging market or an Asian ETF. So you're going to have minimal overlap between the three. But then if you looked at it and said, well, I've got investment in, say, and I'm going to use this example because obviously it's most current for me in our new semiconductor ETF, the semi product. Now, that has a large allocation to ASML. So if you were to hold that, and depending upon the weight you held that in your portfolio, now that is much more of a satellite exposure because it's a thematic, but you have to take into consideration that you then have an overlap between ASML. Now, because depending upon how you're using the Eurostoxx 50 ETF, for example, if it was also a satellite, that exposure could be small. So it's okay to then hold, but it's just being aware of it in terms of, are there overlaps between the different ETFs? And especially when you look at thematics and sectors, global sectors, etc., there may be some overlap within this space as well.
Yeah, I think that's a fair point too. A lot of people do tend to collect when they come to ETFs, and it's probably just knowing what role the ETF plays in a portfolio. So what is this? Where does it sit within, core or satellite? And then what's actually inside it? Go to the ETF Securities website, have a look. I was actually just, as you were talking then, I actually just downloaded the portfolio composition because I just wanted to see what was outside the top 10, but was really interesting. And then there's companies like Volkswagen, is it Danone? We've got BMW, Vivendi, heaps of really interesting businesses in here. Adidas, like lots of businesses that if you just look at the top 10, you probably wouldn't realize they're in there. Adyen, which is the global payments business, which I'm really excited about. It's a really interesting business. So lots of really interesting companies inside here. And you probably think, you probably see these big names and you probably think, they're US companies, but actually they're here in Europe. So really interesting ETF, mate. I'm glad you came on and chat about it. It's ESTX is the ticker code on the ASX. If people want to find out more, if people want to see the list of the 50 companies that are inside it, where can they go?
Yep. So the best place to go is our website. So that's etfsecurities.com.au. And just at the top there's a products tab. You can just hover your mouse over there and you'll come up with a list of our funds, and you can click on the ESTX fund there. And as you said, you've got the product flyer, the fact sheet, the product disclosure statement, the full holdings, and sort of some information on the fund and some articles and content as well.
Yeah, cool. I know you've done plenty of videos on not just this ETF, but others. So plenty of resources on there. Great. Kanish, always a pleasure to chat, mate. Thanks for joining me.
No, thank you for having me on.